Well, I'm excited to welcome in Mr. Michael Elefante. How we doing, brother?
Doing well. Appreciate you having me.
Absolutely, man. So first and foremost, you're a new dad. How is, the balance between building your, BNB empire and all the great stuff that you got going on in your kind of short-term and hospitality space, as well as being a new father?
The balance isn't too bad. I mean, some days I'm busy, some days I'm not, but the whole lifestyle I wanted to get into before having a kid, my wife and I agree, we wanted the time freedom aspect. So we achieved that, which has been a blessing. We're both home every day. I work up in my office, a decent amount of hours, but for the most part, we're just watching her grow every day and getting through the sleep regression here at 4 months. So that's been a little tough, but other than that, it's been wonderful.
Man, I remember those days. You think you're in a nice little rhythm, and then all of a sudden they throw a curveball at you, right?
Yeah, we had 3 nights in a row of 8 hours of sleep, and I was like, "We have arrived."
Yeah.
And then it was like, it was
Celebrated
tough.
too
Yeah,
soon. She's like, "You thought, Dad."
yeah. She's like, "Bet you thought wrong." Yeah,
So maybe we can talk a little bit about obviously we're going to dig in today on, the Airbnb empire and community and all the amazing things that you're building and doing right now. But like, where did this start for you? Because I know, many people who get started on their entrepreneurial journey, right? It's the lifestyle, it's the freedom of time, of, finances, and really just breaking free of kind of that rat race. And hospitality, Airbnbs has become this new kind of vehicle that has really not only allowed people to do that, but do it in a really fun and exciting and lucrative way. So I know we're going to dig into that, but like, where did this journey begin for you, brother?
for sure. My wife and I both grew up in Chapel Hill, North Carolina. I played baseball through college at Elon University, so college athlete. It's where I poured all my effort and time into. And towards the end of college, I had a redshirt year I could opt and use for come back for a fifth year, but I graduated with a finance degree, and I was hoping to get drafted. Didn't ultimately. Probably for the better. But I was looking for jobs or a part time job until I made up my mind to come back to school. And I was working a sales gig for a startup company, awful product, and I was pre-selling it door to door in South Florida in like 100-degree weather. And I didn't make a single sale that summer. I was like, all right, I got to at least make some money to pay for like the day to day stuff, right? Gas, food, roof over my head. So I applied to like 15 different jobs. I had background in like waiting tables, all that good stuff. The only two companies that interviewed me out of like the 20 I applied for was Chipotle and Dunkin' Donuts. That's how I resulted. A finance degree from Elon University. Didn't make it to Chipotle, made it to the final round of interviews. They hired a high school kid, and then Dunkin' Donuts hired me for like $7.35 an hour or something like that. So here I am, 5 a.m, pouring coffees for $7 an hour, and then working a dead end sales gig, more or less like an internship in the afternoon. Decided to come back for a fifth year of baseball. Fast forward, graduated, got an entry level role, business development representative, cold calling 70 to 100 calls every single day for a tech company. No idea what I was selling, right? And I was just like, this is it. I've arrived, making 35K a year. It seemed like big money at the time. And after like a few months in, I was already burnt out. And I know that sounds bad for a lot of people out there that are like really hustling for multiple years. But for me, I was like, I feel numb driving home for work. I was not excited. Making more money, like almost didn't even excite me anymore. But I was like, this is what everyone does. You got to put your head down, grind it out. So I worked my way up, got a promotion, changed jobs twice, got a job at Google doing inside sales for them, got a job at Extreme Networks doing outside sales for another tech company. And the same thing happened. A little bit of lifestyle creep, started to make a lot more money, but it didn't bring me happiness. So I was like, I need time freedom. My wife and I both agreed, let's figure out how to invest some of this money that we've saved up into a vehicle that will pay us monthly cash flow and allow us to go travel. That's what we love to do. So that's all we wanted to do is travel. Before we had kids, we wanted to have our time back. So we looked at tons of different options, right? I looked at crypto, stocks, real estate. Real estate, the only thing that made tangible sense, in my opinion. And we had moved from Dallas to Austin and then finally to Nashville. Stayed at a couple Airbnbs, and I just started to do the math on on a spreadsheet. I'm like, they're charging this much per night. They're booked about this much every month, and their mortgage is probably only around this. I was like, they got to be crushing it. So I was like, why isn't everyone doing this then? So I just started to run numbers on a bunch of random properties. Finally, just built up the courage to buy one. And then the third month, we were set to cash for like $7,000. I was like, this is nuts. Then COVID hit. So a lot of our cancellations happened, which is fine. I was like still full steam ahead. We liquidated our IRA and our 401k to acquire the second.
So you guys were all in.
We were all in 2 feet, head first, whatever you want to call it. Had two, and then ultimately saved up for a third. So we got 3 in the first year. And then travel was still kind of wonky in Nashville, as where our first 2 were. Next 2 were actually in Gatlinburg, and all the travel pivoted to the rural areas. So things started to go really well. And then when travel came back to the city, we had hit financial freedom in like 11 months after our first ever investment. And we were like, holy crap, this is insane. Let's get one more, got our 4th, and then we'll quit our jobs. So got our 4th, did a big one, split that one 50-50 with a partner. And then everything came full steam ahead in Nashville and Gatlinburg. So we're traveling in a camper van for the next year, which is nuts. And in like the 4th month in our camper van, we're working like 2 hours a week from our phones, doing hikes, all sorts of stuff. And we cash flowed over $50,000 in 4 properties in July of 2021. I was like, this is nuts. I was like slaving over my job, being miserable, and not even making this much money. So that was like the most eye-opening experience. So did the camper van thing for a while, acquired 2 more properties down in South Florida. Then she got pregnant, and which was planned. We were trying for a few months. Ended up saying, "All right, we got to get a bigger van or a house." So chose a house near Greenville, South Carolina. Settled down, and now we just bought our 7th, which will be like over the top amenities experience wise. That's kind of what we focus on, which I'm sure we'll get into. And then we arbitrage 1 other unit, so this will be our eighth short term rental. So that's our bread and butter. And then over the course of the past couple of years, started posting on social media, just sharing my experience, trying to help other people. That developed into several other lines of business as well. So it's just been kind of a whirlwind of a couple of years, but just along for the ride, enjoying every single day, and just living it up.
Dude, that's amazing, man. I mean, so many things to unpack there, right? Because I think, unless somebody's been living under a rock, if you're an entrepreneur and you've been looking at how do I, different ways of making money, Airbnb is hands down one that has become a very popular topic. What do you say to the people that feel like it's too late? Is Airbnb dying, or is it still a blue ocean with plenty of opportunity to take advantage of?
It definitely depends market to market. I mean, there's tons of opportunity out there. People will never stop traveling. I think Airbnb and short-term rentals in general will continue to get more competitive. But for my advice for anybody getting started, compete on value and experience. Don't compete on price, because the days are dwindling down to where, hey, you can get a cheap rental, bare bones, as cheap as possible, and you're going to do quite well. The profit margins are getting a little bit thinner there. The real money is to be made if you can provide an awesome experience. And Airbnb experiences, right? I mean, they even show that on all their commercials. That's where they're focused on marketing anyway, is cool pool properties, cool cave properties, cool this or that. So as long as you can compete on value and still be among, capture the demand at the top 20, 25%, the bottom 50%, I think will struggle over the long term. But there's still tons of money to be made for sure.
So talk a little bit about that. Like when, we're addressing a certain group of people that may have, made purchases or investments or thought that just because, they're putting it up on Airbnb, it's going to be profitable, right? But there's somewhat of a formula that you're talking about here that kind of, certain, criteria around a potential investment opportunity that could, meet all of the requirements for a successful Airbnb. Talk about some of the ones that, aren't successful. Maybe we start there of what types of properties should you maybe avoid, or areas or things in a potential either analysis of a property or something that you're thinking about, Airbnb.
Yeah, for sure. I guess it's more or less what makes a property successful. And it's just the opposite of where people will struggle. But what makes a property successful is you have to do the market research. Each market's going to be a little bit different, but within each market, even each zip code or neighborhood is going to be very, very important to understand. Just because you invest in Nashville, Tennessee or Austin, Texas doesn't mean that it's going to be a killer rental just because it has it in the city. One pocket of the city could have way stronger demand than a pocket 2 zip codes over. And you may not know that unless you look at information on AirDNA or a similar site that captures that type of information, and do your research on comps. And secondly, what types of properties, or amenities, and things like that are bringing in a higher occupancy rate and a higher, a larger demand for a higher daily rate. And then similarly, if you don't have a property with a view of the city or a view of a mountain or lake, or you can't walk, you're not walking distance to the main attraction they're there for. Or if it's more of a destination place, like what experience can you provide? Is it a water feature like a pool or a hot tub? Is it killer design? Is there like a photo moment there that people are willing to spend extra for a special occasion, like a bachelor or bachelorette party? If you're just going bare bones, like hotel style, hey, I'm just going to provide a property. It's in an okay location and it has the basic, it has a bed and a pillow and a TV in the living room. That's where people are going to struggle. But if you get it super dialed in to this is where demand is looking for and the demand that is willing to spend the extra amount of money per night for this experience. And here's the criteria. If you can get it super dialed in, that's where you'll be ultra successful.
Yeah. Yeah. I mean, there's kind of the two different things that I look at as well in terms of, I think everything you said was spot on. And it's, I think there's certain people that just think that because they can buy a property and put it on Airbnb, all of a sudden they're going to get a great ROI and they're going to get 3 times as much as their mortgage. And that's not always the case, right? Versus, because then at that point, you really have to make your property very desirable and become an actual destination that people just aren't going there, for a vacation or for a specific reason, right? Versus, I know you invest and I invest in a lot of leisure markets where people are going there for a specific reason. They're going there year round. And then how do you, right, ultimately create and design an experience around the customer that is something that not only the location is going to pull them in for, but now your property is pulling them in for. What are some of the risks that new investors need to be aware of that they don't think about when going into Airbnb? I know a lot of people romanticize how amazing Airbnb, and hospitality investments are. And then when they get into it, if you thought, real estate investing in general was passive, let alone Airbnb is passive, you got a pretty hard wake up call coming your way. So what are some of the things in terms of due diligence and, preparation you recommend new investors be aware of or do their research on?
Definitely local laws and regulations in your specific market. They differ city to city, county to county.
Yeah.
But the last thing you want to do is go into a place that is very aggressive on changing their rules kind of overnight. Or if they already have rules in place, you want to make sure you're zoned appropriately to obtain a non-owner occupied rental permit or tourist residency permit, whatever they call it. Each market calls it something different. The other thing you need to think about is, I mean, Airbnb, you're in hospitality. It's not just real estate with short-term and vacation rentals. So there's a whole other side to it. Now, the beauty of it in today's age is you can automate a lot with technology, but you cannot fully automate it unless you hire a VA or multiple VAs, or you pass it off to a property management team.
Yep.
So there's some caveat to that. I'm a big proponent of self-managing when you first start out until you scale to multiple properties, because, why pay 20 to 30% if you have an extra couple hours a week to manage and communicate with guests when needed? Like, you might as well save that money. It'll help reinvest faster. But once you get to a certain point, yeah, I mean, it will creep into your schedule, and all of a sudden you're like, man, I feel like this is more of a headache than not. It'll still be worth it most of the time, but that's the biggest thing. And then the other thing you have to think about is, in terms of cash flow, you have to be very certain, like you have to be very conservative in your forecasting, in my opinion. A lot of people only look at like 2021's data when they bought in 2022 in a market like the Great Smoky Mountains, when demand was so high and the supply could not simply keep up. And even I had a property there. And I mean, it was ridiculous, the type of numbers we were doing. So if you were banking on the highest peak of demand, average daily rates, and occupancy to forecast what you're going to do in years to come, that's where you're going to run into trouble, because you may do well in the next year, but all of a sudden, as it gets more competitive, like your numbers start to taper off a little bit. You want to be in a market where the numbers go up over time, hopefully. So that's where I think people can get in a little bit of trouble. But yeah, it's definitely on the back end. It's like you have to have your system super dialed in with your cleaners, maintenance, all the tech, automate as much as possible, because ultimately that's what will enable you to scale faster. Because if you don't, I mean, it's definitely can be another job.
Yeah, I always tell people, like, you're getting into a business. It's not just an asset that you own and you collect a check once a month. It's a real living, breathing organism with people coming in and out of it all the time on the customer side. But then you also have the back end management side, right? Of, coordinating cleaners, inventory management, maintenance, and asset management. It's a real business that requires real systems. Talk about, what is your kind of criteria for this is a go? I like this asset. I like this market. What is, a buy box for Michael in terms of a great, STR or hospitality asset?
Yeah, so I'll just break it into two different markets. For me, urban markets, which I have properties in. So like a Nashville, for example, just because I lived there for a while, I have properties there. I want a growing population that has increasing level of investment across the board. And the more people that are moving to a place, the more businesses that are coming, there's just more reasons that people need a furnished rental for, either on a short or midterm level. So that just kind of supports the investment, not just from a cash flow perspective, but also from just like a longevity or long-term hold, and asset appreciation over time. If you're in a market that's declining in population and there's an increase in supply and less in demand just for housing in general, that's where you might be a little more stagnant on the appreciation standpoint. But for vacation markets and similar to urban markets as well, I look for how can I stand out? Are there properties that are already doing numbers at or above what I'm hoping to be doing with a similar size property? Because if there's not, then I don't want to say just because I deck this one out at amenities, I can't expect to do 2x what the top performing property is doing in that market. The demand might not simply be there for it. So for me, I just bought a property in North Carolina mountains, and I wanted to have like go all out with the amenities. I wanted it to be a destination. I want to, so any amenity that we can have that either others have already proven that works, like a theater room or a game room, something like that. And then what can I add that nobody else has? So, as we've scaled and grown bigger, our income's grown, we're able to invest a little bit more and kind of target these experiences. And I'd rather get one big property than three average size properties with the same level of cash flow. Because as we were talking about before, I'd rather manage one property
Right.
than three properties for the same ROI. So for this one, we're gonna have like a sport court, basketball and pickleball court, like a 5-hole putt course, a theater room, game room, like the whole 9 yards. So we're able to differentiate. And again, we live in a digital age. So it's no different than social media for me. If I can't capture your attention in 2 seconds and earn a click, say, hey, I want to learn more about Matt's property. I want to learn more about Michael's property. You never even have a chance to get through 5 photos on the splash page, and then the rest of your 50 or 75 photos, however many you have, to sell them on the property.
Yeah.
So you really have to set yourself up to at least get someone's attention.
So talk a little bit about what you've mentioned, some of them kind of in passing, but what are some of the amenities, whether it's basic, right, bedding, pillows, or it's some of the upgrades, right, and kind of the experiences? What are some of the things that you've seen the greatest ROI on in terms of investment, and what are some of the things that you're thinking about or rolling into maybe some of these newer properties that you're working on?
Yeah, I think some of the basic. I mean, think about what most people don't have at home that they're willing to pay for on a vacation to experience outside of their own home. Hot tub. Most people don't have a hot tub. Most people don't have a game room or a theater room. Most people don't have like an outdoor fire pit and an awesome grill area, a pool. So if you can provide, there's a reasons why people visit certain markets like South Florida or Scottsdale, Arizona. People want a pool or a heated pool to go just be in the sun. A lot of people from like Canada or up north go down to those types of markets, right? On the other side, it's like pickleball or a putt course or something like that. That's a little bit more out there. That the vast majority of properties, like 99.9% of properties, do not have those types of amenities. So if you can think of something that's not outlandish, but just way more out there, like a home gym, that just provides like an experience that someone's like, hey, I'm going to vacation to that property because I want a vacation at that property. I don't even have to worry about leaving. I'll have such a good time. Those types of things where you could just pack it full of those things would kind of take it over the top for me.
In terms of operations, I think the biggest challenge that people always note is, whether it's housekeeping or maintenance, having the right team, the right hands on board, unless you're that person that's going to be doing it all yourself, which ideally, if you're going to be scaling, you can't. How do you go about building out your team?
Yeah, first and foremost, you need A+ cleaners, and don't be cheap on cleaners. Like I always encourage people, tip your cleaners. You could charge a little more on the Airbnb fee, but tip them for a good job, because cleaning reviews are going to be the most thing that are going to be most detrimental to your listing. But you need good cleaners to also be your eyes on your property. They're going to be in it more than anyone else in the world, right? They're going to be in it more than you, more than any guest. I mean, consistently throughout the year. So you need them to communicate well, but also be willing to adopt tech if they don't already in their business to automate the scheduling. So use Turno is now what it's called. Turnover BNB just changed their name to Turno, or resort cleaning, to automate schedule syncing between all the different platforms of your property management software and them, so they know exactly when to show up, what to do, and everything is very well detailed, inventory checklists. And it's even better if they also have a maintenance branch to where they could schedule maintenance on your behalf. So that way, like those are the two biggest things: cleaning and maintenance, I would say.
Where do you find these individuals?
So cleaners usually word of mouth, then will result to looking on Turno. They actually, it's kind of like Airbnb. They have like super cleaners, so you can put out a bid and you could see who bids on your property, what price they bid at, what their reviews are from other hosts. That's helpful. Or you could also just look on Facebook groups, on Craigslist. You could put out a job posting, or just Google, local cleaners in the area. And I would recommend interviewing several. You want to find ones that have done short-term rentals before, or that's their primary line of work, and they have a operation pretty dialed in at that point.
Now, there's tons of different prop tech that's kind of come into play now, which has made it awesome from a management perspective. We get all kinds of questions all the time of what are your favorite PMS systems and what are your favorite inventory management? How do you find? So what are some of your kind of go-to platforms and softwares that have really, helped streamline your business?
Yeah, on the operations side, I used GuestDeeper Host for the past 3 years now. GuestDeeper Pros, and we'll be moving to actually Track for my property management company. But GuestDeeper Host was probably my favorite entry level property management software. A lot of my clients will also use Hospitable, which is pretty solid, great UI. Most of them do the same basic level functions, right? They sync your calendars, they can sync direct booking site, they can communicate with cleaners, you can, just basically have it all in one place, one single pane of glass for guest communication and calendars and whatnot. And it will also communicate with a pricing tool, which is the next biggest thing. I've used Price Labs in the past. I really like Wheelhouse as well. They're doing some really, really cool things, leveraging machine learning, AI, and being able to dynamically like really get your pricing dialed in based on what the market's at. So that's been super helpful, especially as you scale. But the biggest mistake I see people make is not leveraging dynamic pricing tools like Price Labs or Wheelhouse, because they're like, oh, I just have one property, like I can control it. I'm like, you're probably walking past $10,000 to $20,000 a year because you're not using pricing the correct way. You can use that tool to make sure you're getting the top dollar for peak demand days, and then you're also not being overpriced by $25 or $50 or $100 a night on lower demand days. And you could drastically boost your occupancy by scooping up those low demand days just by bringing your pricing down to a certain price point. So those are the two biggest tools. And then I mentioned Turnover BNB or Turno and resort cleaning.
Yeah, I would echo that one. Once we started implementing dynamic pricing in all the hotels, I mean, it drastically bumped up our occupancy and our overall, net bottom on our bottom line, which was phenomenal because you don't realize, the human error of just not being on top of this stuff every single day. There's stuff that slips through the cracks. And like you said, that could result in 10, 20 grand, which, depending on if you're a single family or if you're a commercial asset, 10 or 20 grand, drop to your bottom line, divided by whatever cap rate your property's trading for, that's a significant amount of value you're leaving on the table or you're pumping in and capturing, in your property. So I love that you brought that up because I think a lot of people often overlook like what is dynamic pricing. I can set the calendar myself. I'm not going to pay that monthly fee for that, but that market knowledge is critical and oftentimes worth a lot of money.
Yeah. What do you guys use for your hotels for dynamic pricing?
We use Cloudbeds. They have something called Pi that's built in to their software. So it's more of you can bolt on as many individual listings as you want, but it's more for small boutique hotels and larger assets.
Cool.
Yeah, we did use Guesty though. We moved off Guesty about a year and a half ago, but my overall experience with Guesty was great.
Nice.
Yeah, their comp structure was a little higher, where Cloudbeds is more of a flat fee. So that really kind of helped us drop some more to the bottom line. But
Yep.
talk a little bit about your approach and intention behind building your social media and how this is really tied into creating more opportunities for your personal Airbnb business, as well as how now it is birthed into BNB Investor Academy and all of the people that are coming to you to, scale their own investing businesses.
Yeah. Honestly, I really don't like posting on social media even to this day as much, but I learned so much on YouTube more or less before the short form content really kind of exploded with TikTok and Reels and Shorts. But I learned a lot from people like Graham Stephan. And what I liked about Graham and some of these other people on YouTube is they started to be open about how they monetized. That's what drew me in. I was like, that is so cool. Like they're being open. They make this much from ads. They make this much from affiliate marketing. They have now businesses. And the biggest opportunity in today's economy is the creator economy. Short-term rentals are great for building cash flow, scaling wealth, but the amount of money that an individual can make and compete with what used to take big businesses to generate is insane. It's like sickening, actually, of the amount of the. You have to be able to not just build a personal brand, but how can you build a business or businesses that are backed by your personal brand, that are good businesses. They provide value, but the biggest thing for me was providing value first, without expecting much in return. So I never, not that I never expected, I didn't expect to make. I didn't even know how to make money on social media when I first started. I was like, let me just share with what I'm learning, right, through short-term rentals. Here's what I'm learning. And I think what resonated with people was when I talked about, here's monthly breakdowns of how much money I'm making. Here's the revenue. Here's the expenses. Here's the mortgage. Here's the cash flow. And people were blown away because most people online didn't show that. They just said, oh, I make a bunch of money on Airbnb. Follow my page, thumbs up to learn more. It's like, no, here's some transparency. Here's what you guys know. Here's how much we made or didn't make this month. And I did that for like a year and a half. Some of those videos got several million views on TikTok. Then it started to bleed over into Instagram. So that's grown. And I was doing free coaching actually starting out. A lot of people reach out, hey, like, can I talk to you? I'm like, sure. I was like, I'm flattered. You want to talk to me?
You were
Like, I would
stoked,
love
yeah.
to talk. Yeah, stoked. Yeah, of course. So started to do free coaching. A couple people were like, do you have a program I could pay for? I'm like, I could sell a program. And they're like, oh, you should. And I was like, okay. I didn't think about it for a while. My wife convinced me after like several months. Did a video course only at first. That was like well beyond my expectations, how well that was received, and started to build a community on the back end for it. And then started to get feedback from people on how successful they were being, following this blueprint. And I was like, yeah, this is awesome. It like gave me so much more intrinsic satisfaction than anything I've done before. It's like seeing other people succeed following the same steps in some of my special sauce, right, with short-term rentals that I was doing. So social media grew. That grew. One of my first students for the course ever approached me about starting a property management company, Home Team Vacation Rentals. And at first I was like, nah, I don't want to do that. And after like a month, he came back, said, asked me again. I was like, well, maybe I'll consider it. So I dove in with that with him. And now we're about just shy of 100 properties. And we launched about 8 months ago under management. So that's awesome. And really there is just like, there's a lot of bad property managers out there and legacy PMs in the short-term rental space or vacation rental space. And I was always such a big proponent of self-manage because why use someone else who's going to do a worse job than you and charge you 30%? So I finally came to the conclusion of like, well, if we can do a really good job for people, make them higher revenue than they could on their own or through other PMs, our fee is essentially free. Like that was our value prop. So that's grown well. And then one of my other clients, his wife was very good at interior design and they scaled to a crazy amount of money on Airbnb. She started a design company for vacation rentals and short-term rentals. So I partnered with them, help on the marketing front and make sure they get great clientele because they do an amazing job. So, and then the BNB Academy has just like grown, I've coached around 1,000 people at this point in time. And is growing like crazy. Now I have a bunch of other coaches and employees that kind of came on board and work with me. So it's been a long-winded answer here, but having the personal brand and building the trust within the audience and then learning how to be an entrepreneur, which is very difficult for me, and kind of just build businesses on the back end has been very fruitful and very rewarding, but it's been awesome, an awesome ride.
What has been your biggest challenge of becoming an entrepreneur? Obviously, you've had massive success. There's, of course, a lot of failing forward moments along every entrepreneur's journey. What have been some of the biggest ones that you've, struggled with and overcome that, other people can learn from?
Yeah, I think it was trying to figure out things on my own. I learned very quickly that I'm willing to pay for expertise, consulting, coaches, and I'm willing to pay a lot of money. Like I've invested probably 6 figures or over 6 figures in building my business in the past 4 months alone. But I'm going to get like an easy 10x ROI on that. So that's been the biggest learning thing. I could learn it on my own, but it's the same thing I tell other people that approach me about coaching for short-term rentals is you could learn it on your own. I did for sure, but it took me 2 years to like get it super, super dialed in to the point at which we can scale at rapid pace now. So it's no different in any line of business. I think finding a mentor, whether it's free or paid for, and paying for consulting, paying to make sure things are done right. You probably don't know things that you don't know, of course, but you don't know like what your business could be at a level you never even imagined, which is kind of what opened my eyes after paying for some consulting. I was like, there's people operating at this level. I'm like, this is crazy. I never even thought that was fathomable. So that's been the biggest lesson learned for me.
And how has, betting on yourself changed your life? How's it changed your marriage? How's it changed kind of the future of what, your path and your journey looks like?
Honestly, for me, it's just made me happier every day. Um, Sounds super cheesy and easy or cliche, but just having the flexibility and just like total control over my life, just financially and time wise, that is the most life changing thing I have ever experienced. And I'm glad that I took that risk, investing in properties and doing content and trying to build a business, just taking that risk because of what it's turned into. And now with, a daughter, my wife and I would like to have one or two more kids, maybe three if she'll let me. Um, but it's just being able to like watch her grow every day. Like there's nothing more rewarding than that. And for me, I don't want to risk doing something I hate for the next 40 years of my life and then regret not taking the perceived risk of investing or starting that business then. I want to minimize the amount of regret I have at an older age by taking, calculated risk when I'm younger. So
Yeah.
I recommend it to anybody when it comes to investing, building a business, anything like just go for it. Like
Yeah.
the only thing you're probably going to regret the most is not taking the chance on yourself.
I was Jeff Hoffman is one of my mentors, and he was the original founder of Priceline, and he sold it for multi billions of dollars. And I was having a conversation with him over dinner one time, and asking him kind of what his definition of success looked like, and how he felt about his own entrepreneurial journey and kind of betting on himself. And he said, for him, the money was great, but it was more about what he learned about who he was and what he was capable of, and ultimately how many lives he impacted along the way that had nothing to do with him, but the amount of people that his business and making that bet on himself allowed him to go out and kind of how many lives he touched and that ripple effect. And, I think of a lot of people. Alex Hormozy actually just made an interesting post the other day that I thought was very interesting, which he said, um, Queen Elizabeth, who is, richer than 99.999% of the population, right? Um, People aren't talking about her, and it's only 60, days after her death. And his point was like, nobody cares how successful and or how much you suck at life, right? Ultimately you're forgotten in this grand scheme and timeline of the earth and the world as we know it. So you might as well go out and bet on yourself and live the most grand life that you can based on what you want to achieve and unlock. So that's one of the reasons why I love entrepreneurship so much, is it's people taking that bet on themselves and figuring out, you know I want to lead my own life and not a life that somebody else has designed for me, which I think, right, more now than ever, people are somewhat awake to that and more, encouraged to go and take that leap of faith. But still, right, I think we need more entrepreneurs and short-term rentals and, real estate investing and hospitality in general is one of those great vehicles that can allow you to do it.
Yeah. Yeah. I love that. I love that mindset totally.
So for people that want to know more about what you got going on, they want to learn from you, they want to follow you on social media, where are some of the best places that they can go ahead and do that?
Yeah. Just at Elefante 6. That's the best place across all social media. Instagram, I'm the most responsive to in terms of like direct messaging and things like that. And if you guys are interested in the academy and learning how to build and scale short-term rental business, just visit bnbinvestoracademy.com.
So as we wrap up, what are some of your, we're heading into a recession, right? We ultimately, some people are saying we're coming out of one. Some people are saying we're going into a deeper one. How does that impact your strategy? What moves you're making over the next 12 to 18 months?
Yeah. Well, I'm still kind of full steam ahead. And the only reason I say that is you got to be careful how caught up you get into and and also who you're listening to. There's been people predicting the world economy to completely collapse for the past 6, 10 years. Eventually they'll be right. I'm sure they'll predict the next recession. Like, is their timing going to be accurate? No. But everyone's going to say, oh, they predicted it. Like Robert Kiyosaki. I'm a huge Rich Dad, Poor Dad type fan. I like Robert a lot. But Robert Kiyosaki is like all the fear mongering is like, he's all doomsday, like every other post, but he's been doing that for years. Invest in gold and silver. And he's like, invest in real estate one day and don't invest in real estate the other day because it's all going to collapse. I'm like, dude, you're so confusing. Like, you're not even providing good advice at this point. So I don't know. In 2020, everyone said the world was going to end, the economy was going to end. I kind of doubled down. I was just like, everyone says, like, when people are fearful, what is it? I forget the exact saying, but like
Warren Buffett,
that's
yeah.
what,
When the people are
yeah,
fearful, be greedy. When people are greedy, be fearful.
exactly. Yeah.
Yeah.
So I'm kind of on that. I said, like, you don't want to do something stupid, of course, but like during a economic downturn is probably one of the most advantageous times to get started in any type of investing or building a business because your risk is relatively limited, you know? So I think there's going to be tremendous opportunity. And if the economy goes up, then great. As long as you have assets, you know, that's even better for you. And if the economy goes down, then just be prepared to take greater advantage of it. In terms
Yeah.
of real estate, like I think it's market to market. I really don't know. It's all going to depend on the Fed and interest rates too, and what the supply looks like. If there's foreclosures, if there's not foreclosures, but I don't know. I'm more of a long-term mindset when it comes to any type of investing. Like I don't want to bank on any short-term market fluctuations to
Yep.
capitalize or not.
No, I love that. I think baking into your assumptions, your analysis, what I tell people is, in what feels like a bearish, market or a bearish time, just be a little bit more conservative on your underwriting instead of, thinking that your prices are going to be here on your average daily rate, chop that down by 10 or 15%. Chop your occupancy down a little bit. Think of maybe my repairs costs are going to be a little bit higher. Maybe my timeline for getting that project done is going to be a little bit longer. But if you bake in some of these safety nets, and the deals still stand on their own, then, and especially like you said, if you're not, trying to play the short-term window and timing game of the market and you're really investing for the long term, you have a lot more of a moat built around your asset as long as the assumptions and the numbers make sense. So I love that you brought that up because again, right now, one of my buddies said, the rich aren't impacted by recessions. If anything, they lean in and get richer during recessions. So I think, of course, there's always risks and always things to think about and be aware of, but you got to be, aggressive and take some of those risks to capitalize on the upside. And I remember when I got into real estate in 2010, I told myself, the last 3-4 years after that, man, I wish I would have bought more real estate. Thank God I was dumb enough to, buy a bunch of property anyways, but I wish I would have bought 3, 4, 5, 10 times as much as I did. So that's kind of the next mindset that I've got for this season of real estate, which feels like, there's going to be, like you said, some opportunities that trickle out, maybe not as many as we saw in, 2010 after the financial crisis. But Michael, brother, it's been an honor getting to know you and hear about your business and all the success that you're having. I want to, congratulate you, man, and you're impacting and representing big for, the short-term rental and Airbnb and hospitality and just real estate investing space. And we'll be sure to link up all of those resources for you guys to connect with Michael on his social media, on his website at millionairemindcast.com for his particular episode. Brother, thanks for coming on the show.
Appreciate it, Matt.
Cheers.